The world's fourth largest platinum producer, Aquarius Platinum, has reported a quarter-on-quarter loss of 8% in production for the quarter to the end of September, to 109,828 ounces of platinum group metals. CEO Stuart Murray cited operational issues and primary mining contractor underperformance as the factors that contributed to the fall in the quarter's production numbers.
Aquarius Platinum market cap of 10.7 billion, price earnings 48.8. They're struggling in that space. Dividend yield of 2. I suppose at least they're paying some dividend, modest. Tshepo, let's start with you. It comes to the point we've made before that when the platinum price, and recently the rand is going in your favor, you've got to get as much of it out of the ground as possible. These guys are struggling, particularly Everest, which was supposed to be a big heyday for them. And I suppose it's one of the things with mining. You think you're going to go and dig a hole there, and I don't know the good terminology, but when you start digging, it's just not what you thought. And they're just having problems at Everest, left, right, and center. I get the sense that management's not quite on top of it. Every quarter, there's a few more stories around Everest isn't quite there yet.
I'd agree with that. I think this is probably a general theme that you'll see with some of the junior miners, if I can use that term, where I think just by the sheer size of the business, they don't have enough protection to withstand production issues, or I'll use your terminology, an issue with a specific mine, or the fact that they don't find the quality of material in particular mines that they have. So I think this is, broadly speaking, the issue you have with junior miners. So what you're looking for when you're looking to take an investment position, and this is very, very discounted multiples to justify, I think, additional risk that you're taking on.
Hey, Byron, Tshepo raises a brilliant point there. When you implants and you've got more shafts than you can imagine, if you dig a new shaft and your grades aren't quite what the geologists promised, it's not the end of the world, because you've got so many other holes in the ground that you're pulling it out of. When you're small like Aquarius and you know, the geologists say X, and when you get there you find Y, it has that bigger impact, and that's going to be the risk of junior mining regardless what or where.
It is really tough out there for the juniors. You see a company like African Rainbow Mineral who went into joint ventures with everyone, and that's how they managed to grow. So maybe that's a strategy they should implement. Interestingly, they do have that joint venture Mimosa in Zimbabwe, and that was the only one that performed to expectations and did really well, and costs were down. And it's definitely no coincidence that that's the one in a different country is the one that's doing really well. And in terms of the indigenization issues that they're having there, they seem to be sorting things out. I know Impala came out with a statement quite recently that they'd sort of come up with an agreement, and they were in a big meeting, and apparently Uncle Bob was there as well. So they seem to be sorting things out on that side. But it comes down to the fact that it's just very difficult to mine in South Africa at the moment.
Tshepo, let's touch on the South African mining charter that calls for 26% of the mining shares to be owned by BEE partners. When deals are concluded at the top of the market, and given the propensity for some of the BEE shareholders actually sell their stakes, does it not then go against the directive of the mining charter and the actual spirit of the charter?
Look, I think you can probably extend that not just to the mining charter. I think you can extend that to a few of the other sectors where a lot of these BEE deals were done in retrospect at the top of the cycle. Who was to say that 2008 or 2009 would have been the top of the cycle? So I think in terms of when the transactions were done, it's a case of timing, and if the investors in this room were brilliant at timing, we probably be out of work and on a yacht, or collectively on yachts around the world. So timing is a key issue in terms of investments. So I think it's been unfortunate, but you can extend that beyond just the mining sector to other sectors as well. I think
we wouldn't be on a yacht; we would have bought Greece. And talking about Greece, the end of the world got cancelled again. We saw Chinese growth come in, was at 9.1. People argue about the validity of the Chinese numbers, but the point is it came in at 9.1, not 8, or I even heard some people say sub 6. Yeah. What that's telling me is that the global economy is still moving forward, and sometimes it staggers and looks fragile. Western Europe, North America, we're not seeing huge growth. It's emerging markets, it's India, it's China. Yeah. but it's underpinning the platinum price. We've seen that platinum price holding. I'm seeing talk of $2,000 perhaps this year. That seems a bit optimistic, but certainly we're not looking for platinum to suddenly crash below sub-1,000 again.
I wouldn't say so, and I think I'd be cautiously bullish on the platinum price looking at 1 or 2 or 3 years out, given the structural demands that you'll have coming, commodity demand that you'll have coming out of not just China, but India and the other fast-growing emerging markets, including Africa. So I think if you're looking at the growth story, you have strong reasons to believe that Africa will be growing quite quickly, which means infrastructure there'll be a demand for infrastructure, which means demand for commodities. So I think overall, I'd be fairly bullish in terms of industrial commodities.
Is that a subtle way of saying that it's a hot stock then?
The short answer is no, and that's purely from a valuations perspective. Again, I strongly believe in the commodity story, but not at these sort of prices. And again, for some of the junior miners, probably need a bit more of a premium or a discount, shall I say, to take a bit. So no.
Not at these valuations, for example. Byron, hot or not, Aquarius Platinum?
I'm bullish on the platinum price. I think it's absurd that platinum is cheaper than gold. But I suppose that's because platinum is based on fundamentals, where gold is based on speculation. But unfortunately, definitely not hot with Aquarius. Out of all of them, Impala would be my pick. But even with Impala and increasing mining costs, I'd stay away from all miners in South Africa.
Not hot, but there are 2 platinum price bulls here in studio with Simon Brown. Now, given the relationship between commodity prices and the shares of some of these stocks, what would you say, hot or not?
I like platinum. I don't like Aquarius Platinum. And in truth, I don't like any platinum miners. I mean, I want to buy a mining stock, I go buy Billiton Diversified. If I want a single product, I go for Kumba. Aquarius Platinum, not hot.
Not hot. Let's turn up the heat with our guest hot stock picks. Byron, what have you chosen for us today, and tell us why?
I know Tshepo would not agree with me because it trades on a high valuation, but I'm picking Woolworths today. It just it goes with our theme of aspirational consumerism, where people who are sort of entering the middle class aspire to shop at Woolworths. I really like their themes of environmental friendliness and focusing on health and a good lifestyle. And I think that as our middle class grows, and as we saw in Europe early this morning, the world is not ending. So we are going to carry on experiencing good 4% annual growth. Pravin Gordon confirmed it the other day. Woolworths is going to get more and more clients aspiring to shop at them, and once you know they get the clients, their product mix is fantastic. I think they're going to carry on growing.
Woolworths hot stock for Byron. Thank you. Tshepo, your hot stock pick.
Mine is Value Group, logistics business. I'll start out with the numbers because that's really what drives it. On a PE of about 6 and a dividend yield of about 5. I think that's starting off being compelling as it is. And then you look at the company strategy. They're reinforcing their infrastructure in terms of IT spend and actually getting on more trucks and broadening out they're diversifying their revenue stream within the local environment. And if you look at some of the numbers that they've produced over the last 2-3 years, earnings growth this year of 14%, which is impressive given the current environment. I think you'd struggle to say we're in a booming market environment. So the fact that they can grow earnings, double-digit earnings in this type of environment is good. A nice little tidbit is they've just won their contract with Builders Warehouse. So they're part of the Walmart Massmart story, which will be growing into Africa. So I think you're likely to see them following suit and increasing the exposure into the rest of Africa. So on all of those factors, that's one that's particularly hot for me.
Simon Brown, you shop at Woolworths, so I'm sure you'll agree that it's a hot stock, but is there any value in Value Group?
Value I like it a lot. We did it last week when you were off, and with the results that came out, and certainly a hot stock. Certainly we're seeing that growth Pravin Gordon talks. It might not be the 6 or 7 everyone wants, or even the 5 everyone wants, but it's moving in that right direction. I like it. I like logistics companies, and I like the smaller guys, and I would pick them over Supergroup, certainly. Woolies I like. I own some. I have been selling a bit, but I post results I wasn't sure. The price is moving, and I think Byron's right. It's an aspirational. People out there, they're shopping at Woolies. There's queues. It's a good thing.